Hello listeners, and welcome to Plugged In, the energy news podcast from Montel, where we bring you the latest news, issues and changes happening in the energy sector. This week has been a busy one for Europe's wholesale power market. After months of delays, much anticipation and apprehension, the new 15-minute day-ahead auction kicked into action on Tuesday. This is one of the most significant changes in the European power market to date, with most of Europe switched to the new level of granularity. Many of our listeners will still be getting to grips with the new mechanism, so we'll be taking time to look at what power exchanges and traders have been doing in the lead up to this week, the initial response we've seen from the market, and what long-term issues still need to be addressed to make the system robust. We are recording this episode on Thursday morning, 48 hours after the first 15-minute day-ahead auction. I'm going to be speaking to Power Exchange Nord Pool, Energy Traders Europe, and our own director at Montel Analytics. But first, I'm joined by our Norway editor, Gert over Mollestad, who can bring us up to speed on what has taken place this week. Welcome back to the podcast, Gert.
Thank you.
So what have we seen from these early auctions in terms of prices? Have there been any surprises?
Yeah, I must say so. Well, a bit like expected, there are more volatility. Prices are jumping a bit up and down, even within the hour. Earlier, we just had 24 prices per day, but now we have 96 data points. And prices are jumping up a bit within the hour, and that's a bit surprising, I would say. And there also, with a lot more figures, there's also a lot more to keep track on. And we have also seen kind of some spikes we saw, for instance, in the Baltics on Wednesday. Then in the afternoon, you had prices at 96 euro megawatt hour, and then at 4:30. And then a quarter later, the prices doubled to 190. And then 15 minutes after that, it fell again to 93. So it's kind of really yo-yo prices here in many instances.
Absolutely. So how have supply and demand signals adapted to the quarter-hour granularity?
I would say it's a bit early to perhaps to say that, and maybe it's some lack of demand response also maybe driving this within our volatility. I'm not sure, and we've seen many analysts on, for instance, LinkedIn also pointing at this and wondering what's the cause of this. So we have to dig deeper into the explanations behind this, I would say.
Are there any sort of initial trends that you can see so far? I mean, it's only been a few days where we've actually seen the auction results, but what are the initial impressions here, do you think, of the sort of main trends?
Well, firstly, it went well. We have had some delays in publication of prices, but that's only minutes, and it's also been more precise in the second auction compared to the first. But take, for instance, the German curve. It rises and then falls again in the late afternoon or night. But then again, you have this variation within the hour, prices jumping up and down a bit. So it's really interesting.
We'll keep focusing on that and reporting on these developments in the market as and when they occur.
Absolutely. And the really interesting things will be when the system is more under stress, when you have, for instance, very cold days with a high demand or very windfall episodes. How deep will the prices go then? And will you see extreme low priced quarters, for instance? And we are, this coming weekend is forecast very high wind power production, both in the Nordics and in Germany. And then we will have kind of initial test here and see how the system responds. And that will be very interesting. So maybe even later today or on Friday we will have more results and then can dig more into the numbers.
Lots happening. We're keeping up with all these developments on Montel News, Gert.
Absolutely.
Yep. Thanks very much, Gert. Now, I'm delighted to welcome our panel of commentators to review how the first week has gone. I'm pleased to be joined by Hans Randen, Executive Vice President at Nord Pool. A warm welcome to the pod, Hans.
Thank you.
Jerome Lepage, Chair of the Electricity Committee at Energy Traders Europe. A warm welcome to you, Jerome.
Thank you, Richard. Happy to be here.
And Jean-Paul Harriman, Director at Montel Analytics. A warm welcome back to the pod, Jean-Paul.
Thanks. Yeah.
I'd like to start, Jerome, by looking at the background here and talking about how this sort of system came about. How does this new process come about? What's the context here that we need to be aware of?
Thanks very much, Richard. I think we looking at a process that has taken a few years, starting from legislation a couple of years ago in the aftermath of the energy crisis, The power exchanges and TSOs have been implementing this switch to 15-minute products. So it took a bit of time, but it's kind of the end of a process as well, which saw the switch to 15 minutes of imbalanced settlement periods, intraday products, and it's kind of the logical step to align the day-ahead market with this evolution. So this is something that traders and market participants in general have very much welcomed.
So to standardize it across all the different markets, all the time frames here. Why was it necessary? Was that was the main reason for this change then? Because as we're moving to a greener renewables-based system, the 15-minute granularity is important. Would that be correct, Jerome?
Absolutely, and I think all market participants welcome this. Brings more short-term flexibility to the market. This is very useful, bearing in mind that it also introduces more complexity in how the market functions. It's not because it divides the hour by 4 in quarter hours that it only multiplies the complexity by 4. It multiplies it exponentially.
Absolutely. Hans, I'd like to get the power exchange view here. How long have you been preparing for this?
I think we have been preparing in the same window in a way as Jerome in a way said. This has been a long-lasting project for us and for all other exchanges, the TSOs, but not at least also for our customers. It has been a huge change for our customers to prepare for this. This has been demanding, both in a way to develop system, develop algorithm, to secure and test every process. So we could have a successful launch that we really had this week. So it has been demanding, and I think this is one of the projects for the first time also covering the whole of Europe in one big go. Also, most of the other implementation has been a bit step by step, but this we changed all over Europe at the same day. So it was a huge achievement for all of us.
And Hansen, you've been with Nord Pool, or you've been at the forefront of the liberalized market since the start. Really, is this one of the biggest changes that you've seen?
I think one of the most important, of course, what's big you can discuss historically as well. But I think it's a major change, and it's really, as Jerome also said, it's supporting in a way the green shift, the changes we see in the market overall, and also then the political goals in a way to get more renewable and get it operational in a fluent way.
And are you happy with the initial results, Hans?
I'm happy. It's still only 2 days that we have had, so far so good. But of course, this need to be followed carefully in the coming weeks. So to make conclusions after 2 days is a bit hard, but at least we had a nice start.
Yeah,
for the first
pretty
day.
Smooth so far, isn't it? I think that's
Yes.
fair to say. Yeah, so that's very positive. John Paul, we've seen some degree of volatility in the first 2 auctions. Was this expected?
Yes, I think it was. Of course, we've had some insights into how the prices might look by the implementation of the intraday auctions in July last year or June last year. So we were quite familiar with the patterns that we were supposed to be seeing. In general, it's also quite useful to have like the most of your sub-markets in the same resolution. So the balancing markets went to quarter hourly. So it's only natural that continuous intraday and also the day ahead move to the same resolution. So it's like putting a single standard in USB cables is sort of similar to this. It's a big change, and it basically enables the market a lot better. In terms of volatility, as you mentioned, so we see bigger differences in the intra-hour prices as expected. I did read about a sawtooth pattern that people observed, where the first quarter hour of the hour was in the morning was higher than the rest of the hour, which we have also observed in the intraday auctions. So it's nothing new. But I saw comments about this being due to people still forecasting their generation in hourly blocks, and that's obviously not true. This has to do with the capacity calculation for cross-border flows. So the flow-based domain is still calculated in hourly granularity, like it was for the intraday auctions as well. And we're just seeing that back now into this new new day ahead auction as well. It's an interesting feature of the market, and it highlights that there's another frontier that we still have to go to quarter hourly for. which is the capacity calculation. Yeah, it's a new feature for some.
And we've seen sort of prices, as you mentioned, being actually quite volatile within the some of the quarter hours within the hour. So, I mean, in some cases doubling and then falling dramatically. And, some commentators have noticed this sort of zigzag prices. Is this a sign maybe that, the market's still learning? Or what's your view?
No. This is just a feature of having hourly capacity calculations. So it's nothing out of the ordinary. It's not unexpected, but it is, a feature of a market that's not completely harmonized yet. So there's still, we need to get a USB cable for capacity auctions, basically.
Absolutely. And if I can turn to you, Jerome, now what has been the response and the sentiment from traders and members for the new 15-minute day-ahead auctions?
It's been quite positive. As we're taping this, we've only experienced 2 auctions. So the system's handled well for those 2 auctions. There's quite some relief from the side of market participants. As you know, the process to switch to 15-minute products was delayed a couple of times. So we were happy that those delays managed to secure a safe system. Now, those 2 auctions that we've experienced, it's also been rather calm days, rather typical days. So, for instance, this weekend, as maybe some listeners are listening to this podcast, we're gonna experience some more wind. So we're gonna see how the auction with those new products handles during more tense days. Because more wind, for instance, means normally more bids, more complex bids, not only from the renewable side, but also from the traditional generation. So we're going to see a little bit how this turns out, and also what the dynamics are going to be in terms of volume, in terms of prices, in terms of volatility, etc. The welcome is warm so far.
Absolutely, that's good to hear, Jerome. And I think, as you say, you have periods of very high winds or even low, like the Dunkelflaute phenomenon. Maybe we get a very cold day with very low winds. That's going to potentially test the system and the complexity there as well, do you think, Jerome?
Absolutely. So the full winter period is also going to be a strong test, especially for the central western part of Europe and northern parts of Europe. Next summer is going to be another test with heat waves in the southeast. So we're going to see how all this handles, but so far so good. What we can see also with the previous updates and improvements in our coupling mechanisms is that so far it's handled well. And I think Hans can attest to the fact that every time there's been a reform of the market, more complexity implemented in the algorithm, then there's been also some improvement made to it, so that the algorithm can hold and continue to do its work.
That's the perfect point to bring Hans in here and to talk about the system. And, obviously, it's a massive increase in complexity for you guys in the power exchanges. Are you sort of very confident that the new system can cope well with these kind of phenomenon that Jerome is describing, either high wind, low wind, cold weather, etc.?
So we have done at least an extensive testing. Also for us to have a robust operation is prior one in a way. Also to do this market coupling function across Europe is one of the most important things that the power exchanges or NEMOs are doing on behalf of the whole system. So we are putting a lot of effort and a lot of testing, and we are quite confident. We have developed the algorithm further in a way to handle this. There is never a guarantee, but I think we have prepared well for this and hopefully able to cope with future situations that can occur also.
Absolutely. And do you think this sort of granularity, this new 15-minute resolution, will bring more players onto marketplaces such as yourself, so flexibility providers? What will be the impact there, do you think?
I really hope so, at least, because I think the system needs it. Also, we need, in a way, to get the price signals down to consumers on a 50 minutes resolution as well. Also, if we are be able to run the system balancing out, we need, in a way, to get more of the flexibility into the market and into even the day-ahead market, and not only intraday and balancing markets. So get price signal down is at least an important factor for us in a way to try to get more participants on board and then get the response on the demand side on top of the production side.
Because that's the whole idea here, isn't it? I mean, to get that flexibility in this renewables-based system by going to that resolution.
Yeah, and then it's important also that all demand sides see these 50 minutes prices as well.
Mm-hmm. Absolutely, and react accordingly. John Paul, let's talk a little bit on this volatility that we're seeing, and what impact is it having on liquidity, on the volumes of trade that you're seeing?
Yeah, that's a very interesting thing, and the first signs are quite encouraging. So, of course, we're now seeing a day-ahead auction, and the traded volumes on the day-ahead are not really significantly different. As a result of this, what we're seeing, for example, in Sweden, the liquidity in quarter-hourly intraday products is massively increased. So basically, you're seeing an increase on liquidity in the intraday market, which will definitely help better embed renewables into the system. It's not happening across the board. I mean, in Norway, we don't see a change, which you would expect. That's kind of a similar country. Don't tell the Norwegians. But yeah, it's the first signs are quite positive in that respect. But we're also seeing other impacts. So like the intraday auction, the first intraday auction in Germany, the traded volumes almost half, and there wasn't too much volume being traded anyway. So yeah, there's not much of a market left for that intraday auction. So it's interesting that basically the trading is shifting from day ahead, where the shaping of the quarter-hourly profiles was already done, and then moving straight into the continuous intraday. And that's an interesting feature that we see since the go live. Even in 2 days with 2 days of data, you can actually see those trends already developing.
No, that's very interesting. I think, John, do you think the new system was also? I mean, you talked about the intraday relationship with the day ahead here, but what about with the balancing market? Do you think the new system will reduce imbalances and the need for sort of costly balancing auctions?
No. I mean, the balancing market was already in quarter-hourly granularity. Most markets traded already in quarter-hourly periods. The balancing markets are driven by volatility, not by changes in the weather, by outages, by cross-border limitations. They're not necessarily driven by a day-ahead market. You could see an impact on capacity prices for balancing products because you see a more volatile profile, and people will be using smart bids and block bids and those kinds of constructions to get their assets matched in the day-ahead market. So there may be some outliers that appear when things happen that people haven't really thought about ahead of time. But in general, I would not expect a massive impact on balancing markets.
That's very interesting. Jerome, if I can turn to you now, thinking, we've seen in intraday markets, a lot of the trading, a lot of the activity has been taken over by machines, by robots. And obviously you represent traders. Do you think that the same could happen in the day-ahead markets, that we could see the less of a role for people and more for machines?
Time will tell. I remember when we were kids, they told us like there will be no more books. I still have books in my bookshelves. So machines don't take over everything. Yet, of course, this is a strong trend, especially in the intraday market, algorithmic trading, robot trading. So how much this will also impact and is being introduced in the day-ahead markets, we'll see. There are also two different animals. We're still talking about in the day-ahead, talking about an auction that is 12 to 36 hours before the delivery. So the necessity for algorithmic trading is very different. And also it's one auction compared to the algorithmic trading, which is very much using the continuous market in intraday. So quite different, but the fact that there are machines behind it is, of course, the sign of times. And if you've talked about, we've all talked about the complexities involved, the volatility. Are some of your members, Jerome, concerned about potential decoupling, or that the system will struggle to cope with extreme situations? It's a very good question, because we've experienced incidents in the past couple of years, a couple of important incidents on the day-ahead market last summer, in summer 24. Also some incidents on the intraday market in the summer of 25. So we need strong backup solutions. And for this, this is something that we traders in general, market participants, the wider community have been insisting on, to have common fallback solutions in case of decoupling. The power exchanges are still working on this. But yeah, this is definitely something that we need. And as we're seeing also now, there's still some details to iron out in how not really the coupling process works, but like how the transparency around results publication is done, because the switch to 15-minute also means that there have been IT systems that needed to be updated. And there's still hiccups around publication of certain results in some parts of Europe.
Would you like to comment on that, Hans? How are you progressing with these issues that Jerome has raised?
No, I fully support also what Jerome says. As there has been and is still a huge focus on handling if you have any distortion in the market. Also, the market coupling function has not been, in a way, the problem so far. We not have had any issues in a way related to the market coupling as such. So the incident we have had are being by local exchanges, and then to have proper fallback procedures that we are really working hard on and focusing on to secure also that we got only one single price out in the market in the day ahead time frame. So this is a main focus for us in a way to keep a robust operation, but also if something happens to have the robust procedures to handle whatever case that could occur. And of course, on transparency, that is also one. So I think at least we as an exchange are putting a lot of effort in a way to have data out available for markets. So this transparency is also one of the things we are at least focusing a lot on.
Yep, that's reassuring, I think, absolutely, Hans. And we talked about incentivizing smaller flexibility operators, whether they be batteries, whether they be on the demand side, to enter this market now. But do you think smaller players will struggle to manage the risks and bids under this more complex mechanism? I mean, it's perhaps easier for larger companies, but for the smaller, more nimble players, is this going to be more difficult, do you think?
I'm not sure only because of this, but I think there is a development in a way. Also, things are getting more complex all over in a way in the market, so that there could be a move that smaller are moving away from the market and go behind bigger utilities, etc. That could be a direction, and I don't think that is only limited to this change, but an overall increasing complexity that we see in the market.
And what's your view here, Jerome?
When we mention complexity, there's complexity in for the algorithm to handle all the bids, so more bids, but also more complex linkage and conditionality between the bids. That's where a lot of the complexity lies. Of course, that means from a market participant's perspective that you also need to think about that and those links, for instance, between the different bids. But I don't think that should be a hurdle for the operators of short-term flexibilities, and also for the very small market participants or very small actors who don't want to act directly on the market on their own behalf. There are plenty of aggregators providing services, whether you're on the demand side or on the production side or on the operation of storage. So
if I can turn to you, John-Paul, in terms of the new system, the new mechanism in place, who'll be benefiting most in the short and long term here, do you think?
The main benefit is in the integration of renewables, and that's good for all market players. So it means you get a more accurate representation of the value of energy over the day because you're more granular. And that means during ramping periods, you may have differences in the first quarter of the hour and the last quarter of the hour, which reflects the amount of generation from renewables that you will see. So it'll create a better reflection of the value. And because of that, if you're a conventional generator or you're a flexibility provider, that means you can also capitalize already on day ahead on those spreads within those hours. And obviously then during the day, you'll be continuously optimizing similar to a renewable operator. But the starting position is already in the right granularity. and that helps the whole market.
And do you expect this kind of zigzag pricing pattern to continue, JP, and that kind of we'll see this volatility to continue in the coming months?
There's two things. So during ramping periods, you're going to see volatility anyway. But this zigzag pattern is really mainly due to hourly cross-border capacity calculations. That will continue because you might see it decrease a little bit as the sun becomes less of a factor in the winter. But as soon as the summer arrives next year, you will see it come back into those profiles, unless of course we change the capacity calculation methods. But I don't think that's on the cards for now.
Certainly not. I mean, could you just explain to the readers why an hourly cross-border capacity would affect quarterly prices?
Oh yeah, sure. So there's limitations on hourly basis of cross-border capacity, which means the maximum you can import or export during the hour is the same. But during, for example, a solar ramp, you will get this very steep slope of solar being low at the beginning of the hour and being high at the end of the hour. So in principle, you would want to import a lot more in the beginning of the hour. And you might even want to export at the end of the hour. But because the capacity is the same, that creates sort of a within hour disconnect of the prices. Yes, it's a really interesting feature for energy nerds like me. But it's so we're going to continue to see that. And in the morning, that means that the first quarter hour is relatively expensive compared to the last quarter hour, and in the afternoon you will see the first quarter hour actually seeing a lower price than the last quarter hour of the hour because the sun is going down. So in the beginning of the hour there's more solar, and then at the end, and this is something we've seen for years on intraday markets. It's more pronounced on day ahead because of the amount of volume that's being transported across borders. It's quite interesting.
Well, that's a very interesting phenomenon there, I think, and thank you for highlighting and explaining that to the listeners who may have found that intriguing. Gentlemen, I'm going to have to close off here, but thank you for a fascinating discussion. We'll all remain very, very focused on the auction happening in the coming days and especially over the weekend. But thank you for being guests on the Plugged In podcast, the Energy News podcast from Montel.
Thank you.
Thank you.
See you guys.
And you listeners, thanks for listening to this episode of Plugged In. If you enjoyed this discussion, please like, rate, and follow to make sure you get the latest podcast episodes as soon as we release them every Friday. We'd also love to read your reviews of the podcast. It helps us to keep up to date with what you, our listeners, think of our podcast and what content you want to receive more of. Finally, you can head to montelnews.com for more news and analysis from our team of journalists across Europe and beyond. See you next time.